Hey, good evening, Trey. This is Ryan with TrendLizard.com. I got your email. I'm going to take a look, an updated look at SMH for you, the VanEck Semiconductor ETF. This guy has been around for a long time, very popular, a good one to take a look at. So thanks for sending it my way. It's been around since 1999, I believe, maybe late 1998. Little up, little down, back and forth into the 2009 low. This all looks like counter trend price action. Obviously, something changed. I guess that's the 2008 low. Something changed at that point, and it really kicked off to the upside from there, and has gone crazy since then. Now, what we've had to this point when we've looked at this before is a nice first wave, second wave pullback, third wave advance, fourth wave pullback into the 2019 low, I believe, maybe late 2018. Hard for me to see that line there, but then a fifth wave up since then. That to this point has not yet appeared complete, and that remains the case as you'll see as we go. So that is the expectation. Obviously, when a five-wave move completes in one direction, that five-wave move is corrected by a move in the opposite direction. So the concern is, obviously, when this five-wave move completes, we would get a very large correction, the biggest correction that this guy has ever seen, at least since this action back here. So that is what is at stake. Currently, the expectation is that we will get higher prices before this five-wave move completes, and I'll show you why as we go. So let's go ahead and zoom in here. This takes a little more focused look at that advance off the 2008 low, and you can see how we've labeled it: five-wave move for wave 1, three-wave pullback, five-wave move for wave 3, three-wave pullback for wave 4, and then this puts us in that fifth wave, and the way we've labeled it, again, is with a first, a second, third wave up into the 2021 high, and then a fourth wave pullback. Our biggest question would be, has this fourth wave pullback completed? Let's zoom in and find out. We're going to take a look at this up leg right here. So this provides additional detail just of that advance in the fifth wave position off that 2018 low. This action is a little funky here, but obviously with what we see here, we can confidently say this should be a trendy move. That's why we're labeling it as a first, second, third, fourth, and fifth, even if the fourth wave is quite a bit smaller than wave 2. What is clear is the size of this second wave pullback. This is the COVID crash here. Once that completed, we have this pretty detailed five-wave move to the upside for wave 3, and then we have this larger correction here, clearly bigger than anything we've seen since this pullback here in early 2020, and that's why it fits as a fourth wave to offset that second wave back here. But again, the question is this fourth wave pullback, is it ready now to turn up in a fifth wave to head higher? Let's go ahead and zoom in and look at this action. This takes a look at it, and that potential is there. We are seeing this in a lot of places. It's kind of like the potential exists, but there's no clear proof yet, and we're still waiting to see what becomes of the recovery off of May's low. But from the standpoint of the pullback itself, you can see a pretty clear A, B, C down move that could count complete to the downside here, and then this could be the resumption of the uptrend. What we would like to see happen is a move above 259. That would be a 61.8% retracement of this C wave down here. So if we have this ABC move and this later leg gets retraced by more than 61.8%, basically it's price telling us that it is leaving a three-wave move to the downside. That would be a big step towards indicating that the uptrend has resumed. On the other side of that is the level 230. Now, SMH cannot move below that level. If it does, this little bounce off of May's low suddenly becomes a three-wave move. That's not how trends start. That would tell us that a larger pullback is going to form to the downside. So a move below 230 is a no-go. That can be used as a stop level if you wanted to trade this guy. Or you could wait for a move above 259 for additional confirmation and then use 230 as a stop or trail that stop level higher, just a 61.8% retracement of whatever comes to the upside off of this low here. And go as long as it's looking trendy to the upside, that can be traded that way. For me, I think it's still pretty fragile point. I'd let it develop a little bit more to get a little bit more confidence in this up leg to think that it's a trendy move. Let's just zoom in on it real quick. I don't even label this move. You can see it's a three-wave move currently, pretty obvious. Could be trendy, could be 1, 2, and then you have a third wave here, and you can see that move there is pretty clearly a trendy five-wave move. So it just depends on what happens from here. Can this maintain trendy potential? Again, if it breaks down and moves below 230, we're left with just a 3-wave move, and that would be an indication that this is not a low. So those are the key levels to be watching. 259 looks bullish. A move below 230 is bearish, and we'll see where it takes us from there. So I hope that's helpful. Have a wonderful week. We'll talk to you again next time.